All right, let's dive into one of the most absolutely wild days in recent crypto history. We're talking about a day when just one announcement, totally out of the blue, sent a massive shockwave through the entire digital asset market.
$19 billion. I mean, just let that number sink in for a moment. That's the mind-boggling amount of money that was just wiped off the books in the crypto market.
And the craziest part? It happened in what felt like the blink of an eye. In just one 24-hour period, $19 billion. Just gone. It's that sheer speed, that sheer scale, that makes this whole thing so critical to understand. So, what did that chaos actually look like on the ground? Because we're not just talking about numbers on a spreadsheet here. This had a huge real-world impact on a lot of real people.
Yeah, behind that massive dollar figure is an even more stunning human one. Over 1.6 million, that's million with an M, individual traders had their positions liquidated. That's just a technical way of saying their accounts were forcibly closed, totally wiped out by the sudden plunge.
And let's be crystal clear about this. This wasn't just some bad day at the office for the market. No way. This was the single largest liquidation event in the entire history of crypto, a truly record-shattering financial disaster.
Which, of course, leads to the big question. What in the world could trigger a panic of this size? Well, you might be surprised to hear the answer was a single post on social media.
This is it. This one sentence, posted by former President Donald Trump, was the match that lit the whole powder keg. The minute he announced this massive escalation in the trade war with China, the markets just went into an absolute free fall.
Now, what's so important to get here is that this wasn't just any old tariff. It was a massive 100% tariff aimed right at the heart of Chinese tech. And the really crucial part? It included software. That specific detail hit a major nerve in a system where digital assets are so deeply connected to global technology.
The fallout was, well, it was immediate and it was brutal. So let's take a closer look at exactly how this carnage ripped through the digital landscape. I mean, the damage was just everywhere. You see the big names like Bitcoin and Ethereum taking serious hits, right? But just look at XRP. It got absolutely hammered, dropping almost 23% in a single day. And to put that into perspective for you, more than 16% of XRP's entire market value was just erased. This wasn't some kind of healthy correction. No, this was a full-blown crisis of confidence, and it was driven by pure raw panic. And you know, this contagion didn't just stop with crypto. The shockwave spilled right over into the traditional stock market, with the S&P 500 dropping over 2%. It just goes to show you how tightly woven our global financial systems really are now. A shock in one corner can send ripples everywhere. Okay, so right in the middle of all this chaos and fear, a really fascinating debate started to pop up among the experts. Was this the end of the world for crypto, or was it something else entirely?
So you basically have these two completely different stories emerging. On one side, you've got the pure fear narrative, historic liquidations, worries about it spreading everywhere. But on the other side, you had this much more bullish or optimistic view that saw all this chaos as a rare chance to buy in cheap.
And this quote from Edel Patel, the CEO of Mudrex, really just nails that second perspective. He didn't see the crash as an ending. Instead, he framed it as a strategic moment for investors to get positioned for the next potential bull run. You know, the next big upswing in the market.
So you might be asking, how could the market possibly bounce back from this? Well, experts were pointing to a few potential things. First, you had money maybe moving out of safer assets like gold. Second, the potential for a ton of new money coming in from newly approved ETFs. And finally, there's a pretty strong historical trend of sharp drops like this being followed by pretty powerful rallies. All right, let's zoom out and wrap this up by looking at the bigger picture. What's the fundamental lesson we can really take away from this whole crazy episode? I think it really comes down to these three key things. First, any idea that crypto lives in its own little bubble is officially dead. It is incredibly sensitive to what happens on the world stage. Second, that wall between crypto and traditional finance, it's definitely crumbling. And finally, an event like this is the perfect reminder that with this kind of extreme risk, sometimes comes rare opportunity. And all of this leaves us with one final and I think really important question to chew on. In a world that is this interconnected, can
any asset, whether it's digital or traditional, ever really be truly independent from the huge forces of global politics and finance? That's the question I think every investor has to be asking now.